All right, back once again. Hewlett-Packard reported earnings just above forecast for the first quarter of 2009. The world's biggest personal computer maker announcing a profit of $1.03 a share compared to the $1 analyst estimate. So how is the company apparently resisting this economic slowdown? Joining us now from San Francisco, Chuck Jones, analyst at Atlantic Trust Private Wealth Management. Chuck, good of you to join us. What do the numbers today say to you?
Well, we had the previous preview from the pre-announcement, so at a high level, it was in line with what they had said. It's when you start looking at the details, you can see that the cost cutting is where they're really holding down expenses and helping to make that bottom line number. What was also a surprise, but which we also sort of knew about, was their guidance for next year. Now, it's a little light on the top line from what people are expecting. Again, that's largely due to currency, but I'd say it's the integration of EDS being a little bit ahead of plan, the conservativeness that Mark Hurd has overall, and with the integration of EDS, bringing more cost cutting to the bottom line.
Impressed with the job that Hurd is doing?
Have been since he joined HP. He's consistently under-promised and over-delivered. Not so much on the top line, but especially on the bottom line, but has also helped to turn around the PC division. They had a good growth quarter. In fact, they were 10% reported revenue, probably about 5-6% in constant currency. That compares to Dell's numbers being down 6% in revenue. And their operating margin held in at 5.5%, just down slightly from the 5.7% last quarter. So again, executing well. That includes October. Still sounds like November, not just HP, but other companies are experiencing even more softness in November than the previous few months. But again, executing over quite well.
Chuck, what does the holiday season look like for HP?
Well, it's going to be tough. Now, keep in mind that about a third of HP's revenue is large enterprises, a third small, medium businesses, and a third consumer. The way I've been thinking about it recently is enterprises and businesses will still spend to some degree because it's a penciled out profit-loss equation on do I invest, do I buy more equipment. Consumers, on the other hand, may just say, you know what, I can defer buying that PC. So I'm more concerned about the PC and the consumer side of the business than I am, say, the enterprise and business side.
The areas where they may have something to work on, where are they vulnerable right now?
Well, I would say it would circle back to that PC division, where people could just say stop buying overall. The other side is the printer business, where people also would not buy new printers. Now, to a degree, that has a short-term positive impact because printers are either sold at a loss or very low profitability. If somebody keeps the printer, as HP was pointing out, and keeps using cartridges for a longer time, as long as they don't do any less printing, then that's actually better margin numbers for HP. And then on the business side, it's just what's happening in the macro environment. Overall, not just U.S., but worldwide, because they are about 70% or close to 70% revenue comes internationally.
At this point, would you expect its position relative to its competitors to hold pretty much true through the course of the next year?
I would say they should, because when you take a look at the various divisions that they have, in the PC business, Dell's making some strides forward, but I think it's going to be a dogfight between HP and Dell, but I think HP will hold its share and incrementally take some share from some other players. In the printer business, they are the top dog in that, so I could think they continue that, maybe getting a little bit more share. In the enterprise side, it's them, HP, and IBM. Sun has been having some issues. So I think incrementally they come out of this in the next year or two a little bit better off in almost all the areas.
But if I read you correctly, it really is an area right now where they really have to wait and see what happens on the macroeconomic level, because that will really have a tremendous impact on the kind of numbers we're talking about a year from now.
Well, and that's true. But what's also going to happen, and they've also got EDS on the services side, is that they're probably going to go revenue, after currency, sort of flat. That's probably sort of in line with the IT environment, maybe a little bit better. But with their cost cutting, they can deliver close to or maybe even better than $4 in earnings for this year, well, for, let's call it calendar 09, is that the stock's trading about 9 times. So I don't think there's much downside to the stock. I could go down, especially in concert with the market going down if we turn back down again. But I don't think there's much downside to HP overall, and the upside, I think, is pretty good.
All right. Chuck, we're going to leave it there. Appreciate your time and your thoughts. We thank you very much, sir. That is Chuck Jones, Atlantic Trust Private Wealth Management.